Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing earnings season. Now we are in the midst of a corporate quarterly earnings season right now with some of the major companies coming out, including JP Morgan, including Morgan Stanley, including Google, Alphabet, all these companies, Microsoft, Apple, all of them are all coming out now. So I thought it's really important for us to delve into this subject. But before we start, make sure to like, subscribe, and share if you do find value in this presentation. So quarterly earning reports, what are they and how are they released? So every quarter, we have 4 quarters in a year, okay, basically every 3 months. There's December, March, June, and September, okay? Those are usually set for the future contracts, but corporate earnings can actually set up their quarter anytime they want to. Now, the request of the index that the company is listed on. So for example, if you're IBM, you're listed on the New York Stock Exchange, they request that you release your numbers to the public, okay, every quarter that you decide when you do that. So we're going through some of the major companies. JP Morgan came out with their quarterly earnings. Morgan Stanley's coming out today. Tesla's coming out tomorrow. Next week, we've got Microsoft, Alphabet, Meta, formerly Facebook, that's coming out with their quarterly earnings. So it's a really important time of the year. Now, a few notes about it before we start, okay? So these are some small notes that I really think is really important to note. Now, so number one, earning reports are released either before the market opens or after the market closes, okay? They're not done during the day. The reason that is because if there's any surprises, if there's any kind of adversity that the company is going through, it can be white. It doesn't affect the rest of the market, number one. So if they came out in the middle of the day, it would affect the rest of the market. And number two, it's happening before the market opens, so there's very few people that are going to be responding to it at that time frame, because only really market makers and people who have access to ECNs are able to trade that time of the market, either after or before the market closes. So that's really important to note. Now, during the market hours, it'll trade, okay? Even if it's gone up, 50 points, 100 points, if there's really great news, right? It'll continue trading. It'll find itself, because remember, there are major banks, major financial institutions that are trading this on the actual markets. Now, usually after a release from one of these major companies, the CEO will get on to the news or get on to CNBC or one of them, okay? And he'll give some future guidance. And this is just as important as the FOMC press release that it gives after interest rate decisions, because you kind of tap into what the CEO is thinking and where he's addressing the next quarter to go. Remember, companies have to think about 5-6 months in advance, and this really gives you some key knowledge about what the market is doing. This could potentially be more important than the numbers released, okay? So that's really important to note. Lastly, okay, it's a big opportunity, but it's also a big risk, okay? So just take that into stride. Now, I can't overemphasize this. For those of you who have seen some of my content, I am all about managing risk, okay? Your number one goal when you're trading is to mitigate risk, okay? Because you've got to think offensively, but you got to take care of your defense also, okay? That comes first, okay? So now we're going to get into the important trading factors about trading the financial markets during earnings season. So there's a lot of volatility. I mean, it's all over the place, okay? I could think of, number of trading opportunities that we were trading in, even going back to the year 2000, where the markets were just haywire and guys were able to really take home like crazy amount of money and after hours trading of this type of markets, okay? So it's really important to note. Now, there's this thing that I keep on bringing up, okay? If the markets are so volatile and it's going to go ahead of you and you don't know where it's going, then you're really missing the plane, right? You can't catch up to it, okay? So there are trading strategies of how to trade the news, okay, which we've discussed. There's fading it, there's not fighting it. And so maybe, okay, this is the benefit that you're trading during market hours as opposed to trading outside of market hours. I really wouldn't recommend you trading outside of market hours, because sometimes the markets get so slim and it's really so difficult to assess which way it'll go that it's better not to. So you're trading through the market hours that are trading, and we've seen many opportunities. Either there's a gap up, or there's fill in the gap, or there's a gap and go, or there's continued buying throughout the day, or there's a response to it. Okay, things will happen throughout the day as well. So just keep that in mind as you're trading. Now, the volatility before the market actually responds to it is not rational, right? It's a knee-jerk reaction. Those type of opportunities, called the fade opportunity, where there's one directional move and then there's a correctional counter move, those type of opportunities you can take advantage of. Okay, now you've got to assess the market in those type of opportunities. They happen often, okay, but they do happen. So that's one of the strategies we used to use, and we used to have them. And this is the strategy of trading any type of news, FOMC rate statement, any kind of surprises to the market. So these things kind of like repeat themselves after a while, just like the market repeats itself after a while. Another point, the sentiment is only short term, okay? Remember that the market is just being reactive. And when you're being reactive, it's short term, it's not long term. So many a time, that fade opportunity that I'm talking about, where you have one major move and then a counter move, okay? That's short term, that's sentimental. That's not the real thing that's happening. What is the real thing is the numbers. Looking at the numbers, did they increase sales? Okay, this is, when accounting becomes really creative is during corporate earnings season, because, accountants have to kind of paint the best picture of what's going on with the company because they want more investors in the company, correct? So what they'll do is, let's say, gross income went up, okay, or net income, that'll go up, right? But there's sales and revenue is down, okay, which is a red flag, because you want a company that is increasing in sales, not decreasing in sales. And maybe they had some outlays that particular quarter, that they invested in certain investments throughout that quarter. They bought a building, whatever it was, so their net income was down, but their revenue, as long as the revenue is up, is something that's really important. Okay, so these are kind of nuances in the market you just have to become familiar with. And I suggest not trading the initial corporate earnings and just watching what the market and how the market is reacting to it vis-a-vis the sentiment. I remember at one time, one major company, still today, Microsoft, okay, beat its earnings and the stock was down that day. Why? Because it's factored in. Okay, basically the stock was just factored in. It wasn't any new news that had any kind of impact on the stock. So, you have to really be careful when you're trading corporate earnings, because it could be very, very tricky. Lastly, it's momentum trading. It's not rational kind of trading. It's not, looking for technical analysis and applying any kind of technical analysis. There's no historical analysis. Sometimes you do get into situations where you're hitting a support level or resistance level, true, but most of it is momentum trading. So you're just really very quick on the computer, kind of just get in and get out with really quick profits. So keep that in mind. This is Fed Razak. I want to wish you guys a great trading earnings season. Thank you.